Welcome, everybody, to this seminar about the potential of investing in African agri-foods. And I will present you a fund which is called N3F. It's an acronym, the Nutritious Food Financing Facility. Nutritious Food Financing Facility. That's why it is N3F. So, indeed, some words about myself. I joined Incofin in 2001, and Incofin is a Belgian-based impact fund management company managing a number of funds. And since inception, we have been investing close to $5 billion in Africa, but not only in Africa, also Latin America and Asia. And although I like Latin America and Asia, I must say that I'm most fascinated by Africa, and this is also the reason, indeed, why I wrote this book about the future of Africa, which I wrote as an economist and as an investor, and looking at the future of Africa, because due to this demographic growth, every year Africa will see 20 million young people come onto the labor market in the coming 30 years, which means that 600 young people will join the labor markets in the coming 30 years. And the question is whether there will be sufficient job opportunities in Africa to give everybody a job. A few words about Incofin. Yeah, there is a disclaimer in this presentation. It's not my idea, honestly, but it was an idea of the lawyers of the company. But anyway, you can read them afterwards if you want. So what is Incofin? Well, this is the cover of the book again. Incofin is investing or is managing 12 funds in a number of sectors: inclusive finance, which means microfinance, SME finance, sustainable food, like this N3F fund, and also drinking water. We recently created a fund investing in small drinking water companies together with Danone, the French multinational. So all these funds provide either private equity or private debt. And we have today a portfolio of $1 billion US. So on our African track record, over the last 20 years, we invested in 23 countries. And by the way, something went wrong with this map. I don't know why Morocco is missing on the map. We also invested in Morocco, but it was cut off for one reason or the other. Investing in 120 investees for an amount exceeding $500 million US. Incofin's office for Africa is based in Nairobi in Kenya. So let me now talk about the N3F fund itself. What is it doing? It is providing finance loans to SMEs that produce nutritious foods for lower income consumers, sorry. A few data about the fund. It was launched in December 23 with a starting capital of 11 million euro. It is an open-ended fund, so you can enter and exit from the fund. It has a blended finance structure, and I will come back on how this works in the fund. It tries to build resilient food systems in Africa, and also it wants to demonstrate to the investor community that investing in nutrition is something viable and is worthwhile. The fund itself is a partnership between Incofin, and I already described Incofin, and GAIN. GAIN is an NGO that was created in 2002 by the United Nations, based in Geneva, but also here in London. And GAIN's mission is to tackle human suffering caused by malnutrition. It is managed by Lawrence Haddad. He's quite famous. He won the World Food Prize in 2018, and he's also a remarkable person. Our investors include today USAID. Yes, USAID. Still working with USAID. and also the Swiss Development Agency, SDC, a number of foundations, and then GAIN and Incofin both also invested in the fund. And on top of that, we have a technical assistance facility which has been granted by the Dutch government. Let me say something about the rationale of the fund. Actually, there are two rationales for the creation, for the establishment of the fund. There is a health-related rationale and there is an economic rationale. So on the health-related rationale, you should know that 1/3 of the children in Africa up to the age of 5 are suffering from stunted growth. Now, this leads to serious issues, which I saw, by the way, last week in Congo, in DRC, certainly for young girls, which have a stunted uterus leading to stillbirths and serious problems in terms of fistulas. These girls are being excluded from their community, from their villages, because of the ultimate cause was malnutrition. So that is really, really a serious problem, and often a hidden problem, by the way. A second rationale for the fund is an economic rationale, and this is something I also describe in my book. So Africa is still importing $75 billion of agricultural products and food products per year. 75 billion, that's the gross number. If you deduct the exports, there's still a deficit of about $25 billion, whereas Africa is perfectly in a position to produce and cultivate all these products on African soil. There is no reason to import all these stuff from outside. And of course, this fund precisely wants to substitute imported food by locally produced food on African soil. Of course, we also hope to promote employment, and as I said, given that Africa needs 20 million jobs per year, additional jobs per year in the coming 30 years, this fund, of course, makes sense and might contribute to solve that issue. A few key performance indicators that we have established for ourselves by 2028. The fund is still small, it's 12 million or so. We want to grow the fund to 60 million by 2028. We want to reach 60 SMEs, invest in 60 SMEs in 15 plus countries. We want to reach between 7 and 10 million consumers of these SMEs. We want 1/3 of the SMEs to be managed by women. There's a clear gender objective also in the fund. And of course, we'll increase the speed. We want to reach out to thousands of smallholder farmers. All right. I think it makes sense to invest in SMEs. I'm not going to repeat. We'll accelerate a bit. You know that in general, African SMEs have a financing gap of $250 billion. This is a World Bank number. So it makes sense to invest in SMEs because the demand is there. The fund has, this one. The fund has 4 goals. It wants to increase the access to nutritious food. It wants to improve food safety. It wants to enhance nutrient content, and it wants to reduce losses during food production. The investment policy of the fund, a few features. So the fund is providing senior loans and junior loans. They can be granted in local currency. Short-term loans up to 2 years, working capital, 7-year loans, long-term loans can be mezzanine, can be junior loans, and the tickets are between 300,000 and 3 million, and it also has this TA facility. We invest across the value chain, both food and non-food companies, in all these different sectors. And let me perhaps take some time to explain the blended value structure, which might be of certain interest. Actually, the fund has 3 share classes. We first have a buffer, first loss catalytic share class that absorbs the losses of the fund. For instance, all the FX losses are being absorbed by this share class. And this is also the reason why we are in a position to extend local currency loans. This fund is a US dollar denominated fund, so the investor invests in dollar, but we can on-lend in local currency. Then we have a non-redeemable share class, long-term share class, because our fund extends long-term loans. So from an asset liability management, we need also long-term funding, which is this share class is doing. And then finally, we have the redeemable shares for those who want liquidity, so quarterly redeemable shares. Quickly about the portfolio that we have been building up since the inception. So we have been looking at 400 transactions. You see all the different sectors. So 400 real transactions have been analyzed. And today, we have been investing in 8 companies spread over 5 countries for a total of about $8 million US. And you see the countries, so it is East Africa plus Zambia plus Senegal. And I'm giving you 2 examples, and then I will be stopping because of the time. One example here is Good Nature Agro from Zambia, which is a social enterprise that helps to provide high-quality seeds to smallholder farmers, and the business model of this company is based on buying and trading beans from the smallholder farmers. And the second example is Couvoir Amar from Senegal, which is a family business that produces hatching eggs, day-old chickens, broiler chickens, all for consumption because chickens are very important for nutrition. As a conclusion, I would say, please join us to improve the access to safe and nutritious food for low-income communities in sub-Saharan Africa. Thank you very much.